Yes, sir. Yo, what is going on, guys? Welcome to another video. We are going to discuss everything that happened today. And today was actually very interesting. There was a lot of weird stuff that happened, but let's go ahead and actually get right into it. So the NASDAQ actually hit its lowest level today since September of 2020. And this was partly due to the semiconductor sector, which did plunge today. They got hit because of an announcement basically that came out today from President Biden, where he unveiled new restrictions on semiconductor exports to China that limit companies from selling advanced computing semiconductors and manufacturing equipment to China. As a matter of fact, under the new rules, U.S. firms must stop supplying Chinese companies with equipment that make advanced chips unless they first obtain a license. And yeah, that harmed the semiconductor companies, and it led to a big sell-off. Now, let me tell you the other reason why you had the big sell-off. I don't know if you guys saw, but I actually looked at the market at maybe 1 o'clock, and I saw that the S&P 500 went back to 3,500. I was like, holy moly, we're back. Now, it did bounce, it did rebound, but it was just shocking for me to see it go back to 3,500 again. That's just such an insane level. Remember a few months ago, literally just a few months ago in August, the S&P 500 was at 4,300. Do you guys remember that? And now it's sitting at 3,600, barely. Really wants to go to 3,500. Isn't that insane? But anyway, the other reason that caused stocks to actually sell off was because Jamie Dimon, you guys know who he is, very popular, very famous, CEO at Chase, said that the economy is on the verge of a recession. But let me read to you guys exactly what he said, because this is insane, actually. So it says right here, Jamie Dimon said that the stock market could get a lot more painful as a recession is very likely to hit the United States economy over the next 6 to 9 months. OK, he said he sees the stock market falling another easy 20% from current levels, which, you guessed it, would put the S&P 500 at 2,900. Now, believe it or not, some of you guys in the comments have actually been telling me for a while now that you think the S&P 500 is going to hit 2,900. I don't know where you got the number from. I don't know how you guessed that. That is crazy. But Jamie Dimon thinks so too. Now, you guys know I do think that the market will continue to fall. I do think we have lower to go. 2,900. Yeah, there's a serious scenario in my head, in my opinion, where we could get that low. But do I think we'll go that low? Honestly, who knows? If we go that low, what will I be doing? Buy the dip. I'm buying if we go that low. I mean, come on now. Well, I'm buying now. You guys already know. You guys already know. But this is what I will say. If we go that low, because here's what retail investors tend to do, okay? And do not be a typical retail investor. Try to think long term. Because remember, always remember in the back of your head, in the long term, the stock market goes up. That's just all you need to know. And by stock market, I mean the S&P 500. Now, if you're speculating on individual stocks, there's no guarantee there. But I do want to say this. If we get some major pain, you have to keep in the back of your head that long-term markets do go up. So don't be out here panic selling or losing your mind if we go to 2,900. Now, that would suck to see, because a lot of people's wealth will get absolutely, positively murder, she wrote. But once again, as long as you have a long-term perspective, you're not freaking like 75 or 80 or something where you literally need to withdraw your money and live your life. I wouldn't worry too much, even if we go that low, which, again, who knows if we'll go that low, but you just never know. I mean, we haven't had a serious bear market in a very long time. So for all we know, we could. OK. Meanwhile, you also have Chicago Fed president. That's where I live. Charles Evans said that he foresees interest rates moving higher and staying elevated. And then here's what I also think has markets a little jittery, okay? So obviously you got all these different data points coming out this week. You got all this crap coming out. You got FOMC minutes, PPI, you got CPI, and then on Friday, whoo-wee, you have 4 of the world's largest banks reporting their earnings. JP Morgan, Wells Fargo, Morgan Stanley, and Citibank. They will be reporting their earnings this week. You also have Pepsi, Delta, and Domino's who will also be reporting earnings. That is the first wave, the kickoff, as you would say, of this football game we call earnings season. That's right, baby. It's here. So that's what you guys got going on. On top of that, I want to bring you guys an interesting story that actually could do some damage to the economy if this actually happens. Now, I remember this being a story about maybe 3 weeks ago or a month ago, and then it kind of cooled down, but it's starting to ramp up again. So what's happening is the nation's third largest freight rail workers union, rejected a temporary agreement brokered by the Biden administration to avert a potentially crippling nationwide railroad strike. Now, I'm very familiar with strikes. The reason why is because I'm sure you guys are familiar with the drama going on, well, used to be going on with the our mayor, Lori Lightfoot in Chicago, and the Chicago Teachers Union. You see, Chicago is very well known for strikes. So I'm very accustomed to that and the damage that it actually can do. And I'm here to tell you, if the third largest freaking railroad union goes on strike, though, that's going to be a bunch of workers who are not going to be able to bring the essential raw materials and products to the different companies that absolutely rely on that. It's very similar to the truckers union. If all the truckers just stop driving or just go on strike, that's going to create a lot of problems for the economy. Like, some things in the world just can't stop. It has to keep going. Otherwise, you're going to have some problems. So that's why I'm bringing this to you guys' attention. I'm not so sure this necessarily affects the stock market, but in terms of just the overall economy and just life, it's pretty serious. So hopefully they come to some type of resolution. Here's what they said. They said the reason for this is that railroaders are discouraged and upset with working conditions as well as their compensation. Of course, everything always has to do with money. But they are being nice, though. They are giving Congress a little bit of time to figure out some sort of solution before they really go on strike. So hopefully that happens, because trust me, you do not want them to go on strike. These companies need that stuff. Like, they need these trains to operate and bring the materials that they need. I know we all hate freight trains because they freaking have you sitting in your car for 20 minutes, but they're essential. Okay, these people cannot go on strike. They need to figure out some sort of agreement. Okay, so now, what are the major dangers this week that could significantly impact the stock market to the downside? Well, you have more Fed speakers. You also have PPI coming out. You also have FOMC minutes coming out. You also have CPI, which is going to be huge. And then you have the bank earnings that are coming out. Now, obviously, you guys all know that this is happening. But I'm here to tell you right now, I do expect it to be a volatile week. We've already kind of seen it today. But if all of those come in bad, more specifically, if CPI comes in bad, you can't expect the markets to go lower. As a matter of fact, if my memory serves me right, I actually believe that almost every single time CPI has come out this year, the market has gone down, except for maybe like once or twice. But besides that, every other time CPI came out, the market went down. So it's going to be interesting to see what this number looks like. Now, again, with gas prices, and now I just saw an article that said that wheat is going up, the commodities and stuff like that. I would not be surprised to see next month's CPI come in hot. So just keep that in the back of your head. I mean, it's going to be rough, folks. It's going to be freaking rough. And yeah, so anyway, there you guys have it. That'll go conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I'll see you guys in the next one.